Good morning, everyone, and welcome to the European crossover. Excuse me, still a little bit down under the weather. Welcome to the European crossover webinar. And today's a big day. Today's Fed day, and we'll see where we stand now. The euro itself has, it's continuing to move a little bit higher. We were looking yesterday for this market to weaken a bit. Thought it might even punch up to around 1460, but we're up here. We talked about the significance here. Excuse me. I don't know how many people took advantage of that, but we talked about this area right here. We said that would be significant if the market could close above right there, 1446. I didn't think, actually it's 1445. I didn't think it could, and we, have a good opportunity to roll back or ease back. We even talked about it rolling back initially to the 1420-ish, maybe the teens. Well, they did push lower, and they got down to about 14, almost 1412. I'm going to try to push a little bit back up in here, and I thought it would probably roll back, and we'd probably be testing maybe around this morning, like 1396-ish. I think I mentioned even that it was that when we looked on the 2-hour chart, that actually got us down to the 38% of this area. I thought we'd continue to push a little bit lower and maybe start out the morning. Let's see, maybe I did here on the 30-minute. Well, you can see where we ease back. We talked about it'd be very significant if the market was able to close from 1446. So we probably see some money being taken off the table. Well, we did, and we did go on and move. Actually, a pretty decent rebound here, showing the open opportunity to for this market to move higher. But when we failed here, I thought we'd probably rotate lower, probably come down here to about, at least on the initial run, 1396. And I wouldn't have been surprised if it had been this morning around the 1380-ish, maybe 88 to between that and 14, let's say 708. But we've actually continued to push a little bit higher in here. The idea that this Fed is going to come in, come in a bit, softer here. So we'll see, although I think the Fed's going to do its best job, as we mentioned. They're going to say, look, the economy's okay. We just have some concerns. Maybe they may reference globally and give the idea that they're, pausing, but that it doesn't reflect on the economy. I would think they'd even still leave the door open for further rate hikes, even though that's probably not a realistic possibility. But that probably will leave the euro open to sliding back a little bit, and then from there maybe we'll spend the rest of the day moving a little bit higher. But we shall see. When we look at cable here, we took this dip in here. We did go on and slide back. I know when we were looking at it in the afternoon session, I'd mentioned this area right here for support. I think it was 1384. We actually dipped down here to 3057 before rebounding right now up to 131. I'm sorry, excuse me, 3109. But another mover today was the Aussie. And we'll take a look at this here. Had some good data and certainly saw a rebound. We talked about, remember, that was our support, 71.40 from 2 days ago, and the market took it out by 2.5 pips. And we said, we're just going to keep that there because until it's taken out, it's taken out. And the market actually had a pretty good smart rebound here on the Aussie. Obviously, another market that's going to be, I would say, critical today, but has the opportunity to move higher, or it actually has been moving higher, is right here at gold. One of the things we'd looked at, remember, for the last few weeks, actually almost a month now, we've been targeting this 1304 area here. We did get to that, and we stayed pretty steady, and this is what we're looking at over the short term. Is this move to 1323, and then we're looking at the daily chart, which confluence was 1322 to 78%. The key reason is because if you look here, you see the 61%. The market didn't even pull back from that. So what that tells you, and actually you see the same thing here on the 50%. You didn't see a markedly significant pullback. You saw no pullback at all. And for the 50% went right through it. For the 60%, look, it just paused the market. It didn't do anything. I mean, yeah, eased back just a bit. You didn't see a pullback. So really that opens the door for that next target, which in this case is 78%. And this is where I think the market will want to move to. Well, we're almost there at this point for all intents and purposes. So you can see right here that, and this is where the market wants to go to. I mean, it doesn't mean it won't move even higher. I mean, you can think about, we'd mentioned that before, over the last, over 2.5 weeks, the resiliency of gold in light of a much stronger dollar, the equities coming back much stronger at the time than we would have expected. So certainly, like I said, the door is open for this market to easily push at this point to the 78%. You're really taking your chances when you try and go against a curve on this, because this has been built up for so long here with the gold market. With that, we'll go and take a look at the morning bid. We'll keep the news probably going forward in the future. We'll probably keep the news very, very light. We'll spend a little bit more time, on the analysis. So we'll probably, even on the FX stories, probably grab maybe one or two that actually make a highlight. Like today, there was no reason to even cover gold. There's no significant news, although gold is very higher. But like I said, and then the other story was the Fed. So only those ones of significance. We probably won't spend too much time on news. We'll cut that back even further. But let's go and take a look at the morning bid. That's always key, because it gives this first outlook or what the onset of this the day is. So obviously the news is still very key with Brexit. So what did the events in the UK House of Parliament last night actually mean for Brexit? By sending PM Theresa May back to Brussels to demand things that she has no hope of getting, it makes a chaotic no-deal exit all the more likely. That's what simple logic dictates, and of course that might still happen. One of the reasons why Sterling touched the lower last night, but this has been better seen than the more theatrical perspective as a slightly corny melodrama, where the principal players do and say one thing but secretly hope another will happen. May's last-minute decision before the debate to get back an amendment urging her to renegotiate the Irish backstop was vital in helping it pass, yet she presumably knows full well that the EU will not just relent and give her the significant and legally binding change to withdrawal agreement. She now says she wants even the true hard believer Brexiters to know that too, which is why they stress they will not automatically support anything she manages to bring back from Brussels. So all this simply gives May another couple of weeks to apply pressure on lawmakers of all persuasions to give in and back her original plan. Even with the threat of a no deal looming, that's still an uphill struggle. Remember, she lost the first January vote by a massive 432 to 202 margin. The seat is now set for a high noon moment with a fresh vote on February 13th. This will also be the moment when the middle of the road lawmakers must finally decide whether to come stage center and force a delay to Brexit. Well, early morning, we have Sterling's retreat on the latest Brexit twist, and Apple's post-bill surge on its earnings relief, providing conflicting influences for the world markets on Wednesday, as the Federal Reserve's latest policy decision is awaited tonight, and Sino-U.S. trade talks kick off in Washington, as Apple results came after Wall Street slightly in the red, but the tech giant stock rose almost 6% after hours as positive news on its earnings from iPhone services offset its China-related revenue warning earlier this month. S&P futures were little changed for the first thing on Wednesday. Sterling found its feet this morning after dropping 7/10 against the dollar, and the euro on Tuesday, even following a series of UK parliamentary votes on the government which should do next on Brexit. The two successful members gave PMA backing to go back to Brussels and try and change sections of the EU withdrawal surrounding the Irish border backstop. We don't want to spend any more time on that. Elsewhere, the Chinese yuan and other merchant market currencies rallied against the dollar on optimism about trade talks and ahead of the Fed decision, where hopes that are high the Fed Chair Powell may signal some easing of the pace as the central bank's balance sheet rundown. And quickly, the Aussie dollar surged on Wednesday as inflation topped forecast, while the Chinese yuan reached a 6-month high in the offshore market before trade talks between the U.S. and China. In the hope, on the bigger scheme of things, data prompted some degree of stabilization in interest rate expectations, which is helping the Aussie, said Manuel Oliveri, And let's go on and quickly move. Like I said, we're not going to be spending as much time, little by little. I mean, we kind of shape in the way the European crossover webinar goes, and we'll probably may drop another market and add another cross trade on here, but we're coming in a little bit slower, but it's probably going to be a little bit less focused on the news other than the morning, what we call the morning bid, and then maybe one or two pairs. That's it. And then unless the market's significantly moving, gold, well, it's huge today, but there's no real significant news. The only mention that I did mention the news was that we're seeing a bigger move in the GLD, which supports the move we've already seen in the XAU. And on to the pound. Tried to find its footing on Wednesday after sliding on the fresh concerns. It's difficult to tell what's the next for the pound, but the March 29 Brexit deadline will likely be extended, and the focal point is on when and how such an extension is be decided upon, said Yukio Ishizuki. For now, the focus shifts back to the events with more consequences for the dollar, such as the FOMC, China trade talks, and the U.S. jobs report. Markets are closely watching the Fed's decision. Traders are priced in, and only a slight chance of a rate increase for 2019. The Fed is likely expected to stand pat on policy, but the dollar could face pressure if the Fed opts to highlight the negative effects of the U.S. government shutdown. So that's going to be something that you want to go on and key on. Let's quickly, just as I mentioned, fly through this. We'll spend this bit on the Fed because that is the big news of the day, and that's going to really give the shift and the pivot for where we go on the dollar. So the Fed likely to hold rates steady as it navigates data blind spots. In the 6 weeks since a confident U.S. Federal Reserve raised interest rates in response to a strong U.S. economy, consumer confidence dropped, wholesale prices weakened, financial markets wobbled, and home sales fell. For the field, China tried to boost lending to its slowing economy. The ECB acknowledged ebbing growth in the Eurozone. IMF cut its economic growth forecast. As they conclude the two-day policy meeting, Fed policymakers will have to decide on how big of a risk of all that poses in the near decade-long U.S. expansion. Fed officials are clearly sounding as if they are pausing. They don't know exactly what's happening to the economy because the data hasn't been coming through, said Melanie Baker. The U.S. Central Bank is scheduled to release its policy at 2 p.m. Eastern Time. Analysts at Goldman Sachs said they're expecting the Fed to water down the language from the December policy meeting, and some further rate increases should be warranted this year. Such a move could pave the way for a possible extended pause in monetary tightening, buying the Fed some time. The Fed raised 4 times this past year. That's all history. Those expectations could shift in another direction depending on whether the Fed's policy continues its characterized economic growth as strong and still describes the risk to the economic as roughly balanced. Some investors have cited that the taper as a cause of recent market turbulence, saying the Fed has sent a confusing signal as it tacitly puts upward pressure on long-term interest rates, even as policymakers seem ready to halt for now and more overt moves to raise rates. So with that, let's just go on and quickly move into the charts. So generally, as I said, when we have a big event day, we'll have another big event day in a couple of days, being the jobs report. We go in and widen the parameters on this support and resistance. So let's go and move into the euro at this time. Well, certainly the door is open for this to move higher. And you can see here, we even have the momentum shifting here on a daily EMA. And something I don't, like I said, I don't follow too much. I mean, I just use EMAs on the 30-minute because my trade is, more short-term. But I almost have it here as a default. But one thing is that it's probably rather obvious, is that now we have the momentum going with the euro at the time. Well, this is important because, as we mentioned before, when the dollar was making that move, and here's the dollar, it generated a sell back in here. And you can see, even as we rallied up and the market pushed to highs it hadn't seen in nearly 2 weeks, we saw here that the market was still in the sell mode. So that's why the EMAs, even on the daily, which I don't really focus too much on, are really key because they tell you exactly where the market, what I wouldn't say the position, but at least where the momentum is on when we're looking at these markets. Well, that momentum is now shift undeniably for the euro to the upside, and certainly the market is set. It's looking for the Fed to pause. Let's see how we come up with the language. I don't think the Fed's going to be trying to press. It's just going to be a matter of, as Goldman Sachs says, if they try and water it down. So where's the key areas here? Well, this market looks like it really wants to go on and push even higher. So where are the opportunities? Well, for starters, this is 1470, but this market certainly is acting like it's set, like it wants to move higher, and will bounce around quickly. One of the reasons we were thinking it simply just wants to push higher. We'd mentioned the 1446, and you saw that on the daily, is key as if it was going to be able to close above it. The market had a pretty good run here. It had squeezed a few people. Myself, I had taken one of the positions, just a small scalp position, up in here in a pretty good area. I think at the time it was, I don't even remember what it was, but I ended up losing, I think it was 12 pips or something like that. But anyway, the point being is that we pushed higher, and then the market pushed a little bit higher. It had every opportunity, and we had talked about the significance of the daily at 1445, and it rotated. We thought, okay, well, it'll probably pull back. That might even push a little bit higher. We'd even given it thinking, okay, it might push up, squeeze some extra stops to 1460 mid-U.S. morning session. But we thought, okay, at this point, the market, you'll see some longs take some of the position off. Well, we came down. I thought the initial move would take us into the 1420, maybe 14 teens, which it did, okay? But I thought we had the opportunity to still push a little bit lower, maybe start the morning out here around 114 even. Well, we pushed even higher. Once again, the idea is this market doesn't even want to pull back much. It's ready to go. So how far can we go? Well, if you look at it on the 2-hour, this is right there knocking on the door here at 115. And let's go and take a look here on the daily. You can see here, if we just give it just a little bit of an area here, 1475. Well, depending on what happens with the Fed, we may just take a pause at 1475, pare back a bit, and then reassert ourselves. So initially, what would the market eventually want to go to? Well, the bigger area here is going to be 1542. When we come back here on the 2-hour chart, though, it's really about 115 right here. That's going to be the key here as far as taking out. Now, how much further we can go beyond that would be 1532. 1532. So what we're going to do is there are going to be 2 areas right there. Yeah. And all this means right here is 115 is going to be key. But let's say we end up pushing beyond that. Where's the next likely? Now, I think that the market eventually will want to get to, as we're looking here, right there for 1542. But on the, like I said, for today, if we're able to crack beyond this 15, the market may ease back a little bit if we do get a strong day. And then if you see the market still pushing and you're thinking, well, where's another area where this market may lay off some? It's going to be here, as I mentioned, or that would be the thought, it's going to be right there at 1532. And my thoughts would be, if we got past 15, probably run out of gas, actually right there in the middle-ish, 1525. But we could have pushed a little bit higher with all the strength, maybe up to 1532. So you might see the market maybe finally tire out around 28. around 30. That might be the next, if we do see that, the next push higher. Now let's go on and take a look here for support, and we'll focus just on the 2-hour chart. It's going to be right here at 1380. You can see this coming across right there, here. There's going to be 1380. I think that's pretty clear right here. I don't see how the Fed gives us a big surprise going forward. I mean, looking out in the sense that things are but anything's possible. But this is what we'd be looking at, 1380 right here. Anything beyond that would be very, very important. Here would be that 1346. 1346, so it would be 1380. Okay, let's go move into cable. So we had 3208 here. Now the market is holding up. You know, I mean, we had a little bit of a bad news for the cable, and we actually had our support here at 3083. We came down to 3057. Now our bias chart was right here at 3083. The market just barely paused on that, and then we dipped a little bit lower and kind of holding our own now. We're going to actually move into the 2-hour chart. That's where its resistance is going to be. You can see that coming right across here. These touches, 3168. And, you know, with the pressure that's on the cable right now, that might even be a bit ambitious here to think we can make it that far. If you look at this coming across for today, that's going to be resistance. Although, once again, if the dollar weakens, it's going to open the door for us still to move a little bit higher. So let's split that difference coming right across. It's going to be 3160. For the cable for today. Be interesting to see if the dollar backs down, how much further the cable can move higher, but it'll be 3160 right now. Well, we had our support at 3080, and we did push actually down here at 3057 before rebounding. Where would the support come in here? Let's take a look here. Look at two different areas and see if we can get some confluence. Yeah, it makes a lot of sense here that 3009 is at 38% of the short-term move. And also, you can see right here, the dip here, the high here, It's actually going to be, which makes some sense here. I don't know if we want to push that low this far yet. We'll go for taking that out. We'll say it's going to be right there, 30.09, 30.09. But with the dollar being on the weak side, it's interesting to going to be cable is if we try, how much further can we push here if the dollar does weaken after the FOMC and even on the pullback. Once again, it might be a little bit tough trying to push this down at least for the next couple of days if we do have that weakening Fed as we expect or them to water it down. So let's be a little bit generous here in light of that. And it's going to be 30-30, 30-30 on the support. Now let's go into the Aussie. Well, we had our resistance here, 72.10. The market made up as high as 72.01. Now, like I said, with the idea that the Fed may be softening, and also we've got the Chinese-U.S. trade talks, which they may be able to find something. You don't want to stand in the way of this thing, which has helped maintained a pretty good bid all overall after the flash crash situation. We're going to keep the 72.10. And basically, it's going to work like a pivot. If they bash through that, then they're probably going to push even beyond these highs here. So we're going to keep the 72.10 almost like a pivot. Where, and like I said, we may be blasting through that. But for right now, we'll go on. It was yesterday's resistance. We're going to go on and keep it here. What may temper the Aussie is even though the Fed may weaken and we may push higher, there'll still probably be a little bit of restraint because they want to see how this China-U.S. trade talks go. So we could push higher, but then just kind of sit in here in this 20-ish area, whatever. So we don't want to go too high. You know what? We'll try and at least allow for that, which is up here. That's that's not even much. It's nickels. If you think about that, I'll tell you what, right here. It's going to be 72.19. And because I'm thinking is if the dollar pulls back, we're going to get this Aussie to push higher, but it may restrain itself because we want to see how these Chinese talks come out. So we'll just move this up just a few pips, 72.19. You can see this trigger some stops, but maybe not a big follow through until once again we get past how these China trade talks go. Support, well, things have started to turn around for the Aussie. So unless things unravel, we're looking for support being right there at 71.65. Here we had a resistance at 99.53, and we've come back here, after we were sitting. Remember how we were stuck here in this area and the market couldn't move, and we had 99.88 or 99.89 here as a resistance, and that kept the market checking. Finally, we rotated lower. Remember, we had that 99.23. I think we kept that almost for the entire week, if I remember correctly. So let's go and take a look where we stand here on the 2 hour. This market has held up remarkably well in light of how the dollar's reacted. Resistance would be right there, 99.71. Well, if the dollar does start to roll over, certainly there'll be an impact here on this. And let's take a look here. Eventually, it may portend to move down here to the 98.85. I think and remember how important this area was. At least for now, we'll look for support coming in at 98. Let me see right in here. Yeah, and that was that old pivot area. So we'll go with 99.02 if we do see a rotation of the dollar lower. It may take a while before it gets there because we know how this Aussie, not Aussie, but I mean the Swiss has been slow to react to those downside moves. And remember, that was a key daily pivot before. We saw a decent rebound here in the dollar CAD, actually back and forth area here. Remember the significance of that 32.14. We blasted up here, and the market kind of hung here, not trying to figure out what it wanted to go on and do. And then finally, we pushed here just to trigger some stops. And finally, as crude oil has rebounded smartly. But when you look on the daily, it hasn't taken out anything significant, but on a short-term basis, we saw one heck of a rebound here in crude. But that did allow for the dollar CAD, which is already trading on the defensive. I mean the dollar itself, to rotate lower here. So we've already had a pretty good move here in crude oil. We're trying to see how much. When we covered the stories, remember the outlook. The thought was that the Canadian economy will probably be affected more so than other economies, and so we're kind of quite curious as to see how far this thing would want to pull back. So when we look at for support here, even though if we do see a dollar pair back, at least on first blush, and we do have the opportunity. Remember when we looked at the daily, when this thing first broke, we have the opportunity to eventually come down here at the 31.20. So if the dollar is to weaken, now on a short-term basis, we've already had a pretty good fall. We did come down here at the 32.06. So really the door's open if the dollar were to roll lower here. Back here at 31.52, and I think we have to leave that possibility. I think we've already had a pretty good fallback, but once again, if we are in the sell mode with the EMAs, if we are going to go and push back, I think eventually we'll get down to 31.20. But if the dollar does roll over post FOMC, then we have to look for a 31.52. We just hold here. We had 32.11. The market made down to 32.06. So they just took that out by 5 pips. We saw a smart rebound off of that. Here currently at 32.48. But I think if the Fed's going to rotate lower, you really have to be realistic as to how far it will go. So once again, let's go down to 31.52. Resistance, I'm just going to keep it simple. 32.71 right here. And I don't see any reason for that to be different. So you can see there we had that marked off. And let's go on to crude oil. Boy, did we see one heck of a rebound here. When you look on the daily, it hasn't done, you know, the rebound doesn't tell the story here on the daily, because as you can see here, we're just back to basically where we were before. And this key area right here, 53.87. But it was a very, very nice rebound, though, nonetheless. So when we look at here, 53.87. That's what you can see right here, 53.60, 53.60, yeah, 53.60 will be the resistance for right now. 53.60 on a very short-term basis. I'm working on this little mini doji in here. Let's see. If the Fed is a little bit softer, that's really going to open the door for this market to move back higher. It's going to give us some support. So when we're looking at, and I mean an undertone bid under this market, for support then, if you're looking for a risk area here, it's going to be 52.50. Actually looking right there, 52.54, 52.54, which, if you trade it very short term, $43 would be the 50%. Actually 44. So our support, though, on a very short-term basis is going to come in just right there, 52.55. And let's go move into the dollar yen. Well, the dollar yen trying to hold its own just above this 927 pivot. We talked about the significance here. And no changes here on the dollar yen holding just above that pivot. Now we had 914 last week. The market, I think they held it right there, just above 1 pip, and then we moved this lower down to 908 here. Let's see, and that's kept the market in check. We haven't been able to push any higher. I mean, we haven't been able to push lower, and although the market is still trading in a very tight range for right now, we'll go and take a look here on the 2 hour. So we kept the door open in case this market wanted to push higher, but it's kept it. It's pretty much just treading water. If you look at this, you would think this might be like a 5-minute chart or something. It's actually a 2 hour chart. So it's keeping the market pretty much in check. We had 960 in case we were going to push higher. We actually made it up to, this was the 50% of this move before the market rotated lower. I think it came and missed it by 1 pip, if I remember correctly. I think it was from here. Yeah, right there. You can see that 56 when we came in just a hair. We just kind of rotated lower, but it's been quiet trading. If the Fed starts out a little bit, and I'm talking about if you're looking for a little bit longer term move, if the Fed, and if your thought is, hey, this thing's on a sell mode, I want to be a seller, and the Fed gives a little bit of a boost, at least initially, in Powell's comments, then yeah, maybe, possibly, we come in here to this, and the threat here is if it'd probably be a tough time to try and make it, would be 968. I'm not even sure if the market would want to go on and go that route. But I think the jury's still out here because we'll have to see how the S&Ps react to the to not only the Fed's decision, but the China trade talks. So I tell you what, we'll go on and keep this resistance right here, which is 968. And overall, it's still bullish. Now, it's starting to rotate a little bit lower, but overall, when you look at the dollar yen, you'd have to say, as long as it's above that 927, that pivot, it's bullish until we see something differently here. Now, as far as support, well, that's pretty key, I would say, somewhat obvious, at least initially, which we'll go on and mark as 893. $893 on first blush. And this Aussie yen is really holding its own here, if you look at it. But a lot of good reasons why it's going to hold its own. We had a resistance at 78.62. We saw the market make it up to 78.71 before peering back really to where that resistance was going to be, which is 62. This market really acts like it wants to try and push higher for right now. We know that it's made some pops in here to 79, above 79. And if you looked at it on a little bit longer term basis, on a daily, just for a moment. Let me hit it right here. Let me put this back for. There we go. And I guess it didn't, for whatever reason, didn't save the drawings on here. But when we look at it here on the daily, right there, you can see here. Right there, where the market made that run up to that 79. Just up in here, almost at the 79.20, we made that pop in here. You can see right there, that was resistance when you're looking at it on the daily. Well, this market certainly acts like it wants to go in and push even higher. I'm surprised, how well it's holding up. And even working here with a 61%, and it's not shying back here. So we look at resistance coming in here. There's a potential up here to 79.56. There's some good volume. Right there. 79.52 for the potential is going to push up higher. 79 right there. 79.56. This is a ways away, but I would not be getting in the way of this market for right now. The way it's holding up so well, it's just holding up a little bit too well. So we're going to go and give it some extra room. If we do pop these tops, I'm looking for 79.56. Yeah, I like that area here for them to potentially pop up to. Now, as far as support, but this thing sure does look like it wants to push higher. Even has the momentum going for it. Support's going to be down here, 78.25. There's some additional support here, but I'm saying if it's going to rotate lower, try and break lower, there's some support here at 78.43, but I will split the difference right here at 78.36, so good 40 pips away, 78.36. Once we got past this area right in here, And you can see that coming right across here. That really got the market going. And so we're going to go with 78.36. And let's go move into the dollar index. Well, we're looking at the daily. We've already gone back and forth about how this all played out. And one of the things that was the fly in the ointment when this was moving higher, it was coming into some key resistance at the time, the 96.72 confluence with the 61%, but the EMAs had still remained on the sell mode, and that was the fly in the ointment, even though we had broken out to new highs. So as we try and work a little bit lower, and we're just struggling and hanging on this 95.65, with the Asian analysis we had at the beginning of the week, we're saying, hey, if we get past this 95.18, it's going to allow this market to push much lower here, and we're looking for a move potentially down here. I think it was 93.75. If we get past this 95.18, so we're support for today. It's actually going to be these lows back in here. So it's going to be 95.06, 95.06 here. That's actually 95.03. Those are those lows there too. That's actually going to be our support right now. It's a ways off, but my concern is if we drop, you can look for initial support at 95.36, which is only 40 pips. So if you want to look for a reactionary level, you'd be looking at 36. Right. That's even low here, 24, but we're looking at 95.36 and then 95.03. So let's go and mark that off. Call it 35 right there. So you'll have two dips. You may see a little bit of short coming around 35, but then eventually this market has the opportunity to go down here. Now, the concern is if we get past 95.18, which we did pinch it in the Asian analysis at the beginning of the week, we're looking really for a move at 93.75 overall, but we're just saying here on the short-term basis. Where's the resistance? Well, it's going to be back here to the pivot that we had. This has lasted for so long. It was just an intraday pivot for a while. Now it's a pretty good solid pivot. It's 96.08. We have a 9 there, but it's 96.08. That would be the upside. You could make the case, at least for today, that the resistance would actually come in around 96.02. Okay, but 96.08 is a pivot. I think we just keep that in mind. I don't think there's any changes there, but it's going to resonate a little bit more. We know about that 96.08, and this market would really have a tall task to take on if we can get above 96.08. Moving into gold. What more can we say about gold? It has really played itself out really well. As we were looking at this, and look at this now, we can still continue to push higher. We had a resistance at 1312 because thinking this market doesn't want to back down too much. And at least at the beginning of the week, I wouldn't say 1312 was ambitious, but I probably thought, we'll probably just move just a little bit higher and then we'll roll back. But it has held its own to move this 1312. And realistic now, you're going to have to say this resistance is going to be right here, the target of 1323. Going with 1322. 1304 had been our target. We kept looking for the market to move there, and it was struggling, but that was in light of a stronger dollar, a stronger equity rebound. Yet gold wasn't able to diminish its shine. So we saw some good demand. We thought, if things rolled over, we'd see all kinds of demand here. 1267, see a bounce back, and then they could try and move lower if they wanted to. Well, we didn't even come close to 1267. So the target for right now is going to be 1323. That confluences with the 78% at 1322. I don't know why people keep trying to sell this market. There's a couple of times I even had a chance to scalp and I said, had some other issues going on. I was like, what, I'm not going to mess around with it. I think I might have caught if I would have, and I didn't, would have caught a buck and a half or something like that. It's certainly not worth it to stand the way of this freight train. And I don't get it when people keep thinking this market is going to pull back, and it hasn't pulled back. But we'll see what happens today, but that's the target they want to go to, is at 1323. Before, I think you can see a little bit of a pullback, and I wouldn't even get overdone with that, because as long as the equities continue to struggle, you're going to have that, which we talked about a month and a half ago, an undertone bid with the issue in equities, that people may start to move maybe 1% of their holdings in gold just to be on the defensive in light of the volatility we've been seeing in the equity markets. But certainly when we bounce back, it was holding the gold back, but still we were very resilient in with gold. So where's the support now? Well, if we do get a good pullback, it's going to be right there. Let's call it 1304. Bunds have stayed very strong. I mean, in light of this weakening Eurozone economy, which is, that's the tricky thing here, is that I think the dollar can roll over, and the euro certainly acts, and you can see you've got a nice trend coming up in here. It'd be interesting to see whether they rotate lower beyond that. But, it's the thing is here with the euro, and I think the dollar, we could see a pullback. It's almost, you're curious if the euro will move to a different range, but not be explosive, because this Bund is still telling you that the Eurozone has problems. Now, when we look here, resistance is going to be right there at 64.97. It's a pretty wide range. The euro is going to be right there, support at 64.51. And to move into the bunds. Well, we've had a support here at 11,150 and resistance 11,265. We made it up to 11,277. That was okay here. I don't know if we're going to go and get a boost off this whole situation. The China stuff may give it an intra boost. For right now, the resistance is going to be right there at 11,236. And resistance, support, which we may not even see till tomorrow, will be 11,130. Gold is holding up so well. You're just holding up in here. This is a good little area here if we were to pair back. This is 1396, which is a 38% here. Pull this back here. Yeah, coming in right there at 1389. It'll be pretty tough to go and get back to this area here, but that'll be a decent area here. If the Fed starts out a little bit, Powell starts a little bit bullish on his comments, the market really wants to push long, so they may try and catch, a push on a little bit of a stop run. And if that is, this will be a great area if you could get it to come in. That might be a little bit asking too much, but if we were, that would be a great area to go and step in, which would be the 1389. That's still a ways away. We'll see if we try and pair back. We'll probably see the market ease back a bit because, once again, the unknown is always a risk. So my guess is we'll probably pair back in the U.S. session to come in, maybe as low as 1407, and we'll see how the market holds up. But good luck trading today. I'll get the bias chart posted. And thanks for joining us here on the European Crossover.